Good morning, guys. My name is Andrew from Stockmoney Lizards, and today we're going to be talking about a very interesting chart pattern called the inverted head and shoulders. I personally believe we might be forming one of these at the moment. We're then going to be analyzing the 20-week moving average and its relevance to bull markets. After then actually discussing some fundamentals on what's going on in the East and how this could potentially push the price of Bitcoin upwards. So let's jump right in. So what is an inverted head and shoulders pattern? Normally what happens in these situations is you have a downtrend of price where you have a high, a lower high, another lower high, a low, a lower low, and another lower low. Very bleak situation where the price just seems to be going down, hence the downtrend in price. What normally happens though when you get a reversal of price is you get a nice bounce to the upside. That bounce to the upside normally hits a level where the previous high would have hit, before then consolidating back down to a territory which also coincides with a similar low that it had reached prior to its ultimate low. Now, this situation feels a lot like what Bitcoin is going through. We had a nice bullish bounce up to 25,000, and now we're consolidating back down to the moving average, which is coincidentally very close to what I am seeing as our first shoulder. And sort of from this level we hopefully will see a bounce to new highs. So let's just jump right into it. If we look at the chart, at this particular chart, what we can see is if we move to the daily, Bitcoin has been going down for what feels like ages, making higher or lower highs. Okay, 1, 2, 3, 4, and the list goes on if you keep on going up. And also it's been making lower lows. Now, if this is the ultimate low and what I'm gonna call basically the head, then arguably this could be the first shoulder. Why could it be the first shoulder? The reason why it could be the first shoulder is because we had a breakdown in price, we made a new low, okay, and then we had a nice bounce, but it was quite weak compared to the previous, so it was lower than the previous, before then going down again, making that bottom, which is possibly the same point over here, that bottom, and now making a nice bullish run. We have to admit this was really interesting. We all enjoyed it, you know. It went very high. It hit the same territory level as its previous high, okay, which is a good sign. And now we seem to be consolidating back down to what I believe is the moving average level, but it also coincides, as we analyzed before, it coincides with the first shoulder, which in this case is here. So if price continues to come down and hang around this level, then we could be forming our second shoulder. Now, before moving out of this chart, I'm just going to talk about now the weekly time frame. So the weekly time frame is important to us because we need a bounce off the moving average. And the reason we need a bounce off the moving average is because historically, whenever Bitcoin has gone on a nice run, it has always bounced off the moving average. Stockmoney Lizards had actually posted a very cool chart showing how Bitcoin has three main real phases. It's the bear market, which comes down, it's the in-between, and that in-between is where it sort of flip-flopping in and out of the moving average, 20-week moving average, before then bouncing off the moving average to make new all-time highs. And that's sort of the three phases that it sort of likes to find itself in. We could be in the middle phase at the moment, and the middle phase at the moment could mean one of two things. Either we break through this moving average, and if we break and close below the moving average, this is not a good sign. And if we do get below 19.8k and close the week below it, then I could possibly foresee lower lows. However, I don't think that's going to happen. What I do think is going to happen is we are going to find support in this area. I don't necessarily mind if we go down low to 18, 17k, but we must come back right up fast. And we must not close. And by close, I mean the body of the candle must not come in between this yellow line over here, the moving average. It just cannot. I would like to close above it. I don't mind if the shadow comes below, but I would like to close above it, and we can remain at this level for a number of weeks. We just have to find support at the moving average. Now, I'll explain why we need to find support at the moving average. If we go and we look at the past, we can see that every time the moving average was held, we went on a nice run up to the top. In this case, it was not held, so we made quite some lows, but this was when Bitcoin was $58, $75. It was a long time ago. Then we broke above the moving average, made a new high, closed, did not find support at the moving average in 2014, and then we made the cycle low. Now, I'd like to look more closely at this area over here. So we pierced above the 20-week moving average, we sort of held it, couldn't really hold on, and then we made new lows. You know, this was quite a long bear market, and if Bitcoin is replicating this kind of cycle, then what happened was we got rejected once, definitely over here, arguably twice here, but it was very bad, this one. And then what happened was we pierced above it, couldn't hold it, and made quite a low from here. This is why I'm saying that if we don't close above the moving average, I expect price to go lower, like significantly lower. But we will get the recovery that we need, and then once we get the recovery that we need, eventually the moving average will become our support. And I believe that we're somewhere here today where the moving average will be supported over the next few weeks. Now, if you look back, then what happened after that, after this very key area where we had about 90 days of support on the moving average, what happened was we had that nice run up to the 2017 highs. This, for me, sparked the beginning of the bear market. Rejected until we made new lows, broke above it. For me, the bull market did not start here because we cracked it straight away, and then we ended up coming to new lows, so that did not do it for me. For me, the real confirmation of the bull market, whilst it's late, I understand, it was here, because here we finally respected the zone of the 20 moving average and then went on to new all-time highs. That's not to say that, of course, there weren't amazing trading opportunities here, but this is just my opinion on how I see the market. Since then, we've just been flip-flopping over and above the moving average, unsure as to what we're going to do. Finally, we said this is the end of the bull market, we're going to go down. So we were rejected the first time, the second time in October, and now we've pierced through it. And what are we going to do? Are we going to do those 2015 lows, where we come down below it and we close below it, or are we going to find support 19.8k, 20k, and just move and grind along the moving average before then making a push to the upside, whilst in the process it's there printing a head and shoulders kind of inverted pattern. Okay, cool. So this was just a bit of analysis from chart patterns and moving averages. If we do look at the fundamentals, Stockmoney has posted a really cool chart showing how the total assets of the Fed and the ECB has gone down. However, if you look at the East and Japan and China, it's starting to come up, which is interesting. If we look at the global money supply, and bank lending, we can see that in the US, it's taken a dip. In the UK, in the Eurozone, it has also taken a dip. However, in the Asian markets, such as Japan and China, it's starting to push to the upside. And we know that money printing normally equals more demand for Bitcoin to safeguard your asset, basically, that you hold in fiat. And this is one of the main reasons behind Bitcoin as a store of value. So maybe the east side of the world can sort of increase demand for Bitcoin, push the price up. Having said that, now I just want to zoom out. Yes, we're experiencing a bit of consolidation at the moment, but if you do zoom out, okay, we've had 3 nice candles after a nightmare of red candles. If I look back and I see a strong body and sort of an indecisive candle over here, I sort of see maybe these two as looking similar, although the body of this has shrunk compared to this. And I just feel like this candle is always going to be a bit of an indecisive one. Reason being is because, you know, the price has gone up so high, so quick, and now we're on that consolidation moment. Anyways, guys, so the main takeaway from this is, are we going to hold that moving average? If we do hold the moving average, we will print some form of inverted head and shoulders pattern, which is a bullish pattern, and sort of from there we can say that risk is in our favor for price to continue going up. On a personal note, I had a great week, guys. I opened for one of the best Anjuna Deep label DJs for our events, Shibeen. It's called Shibeen. We have a YouTube channel. In fact, I answer back from that channel. If any of you love music, specifically the Anjuna vibe, I suggest you go into our page, like our stuff. We've got some really cool videos on the way out, and that's basically a bit about me on the side. Other than that, this is not trading advice. Enjoy your weekend and stay safe, guys. Ciao, ciao.